you ready to revolutionize your relationship with money? Welcome to the Finding Financial Freedom podcast with the Frugal Physician, where I, Dr. Disha, will be your companion on this exciting adventure. Get ready to conquer debt, build wealth, and embrace a mindful spending lifestyle that will empower you to live life on your own terms. Hello, and welcome back to another episode of Finding Financial Freedom with the Frugal Physician. I'm your host, Dr. Disha Spath, and this episode, I have my husband here to co-host the podcast with me. Hey, Josh.
Hey, Disha.
Welcome back.
Happy to be back.
We're glad to have you on. Today, we're going to be recapping Dr. Stephanie Pearson's episode and talking about the many important points that she brought up. And then we're going to go into real estate investing, the good, the bad, and the ugly. And really tell you, the points that you should consider if you are thinking about getting into real estate as an alternative investment to stocks and bonds. So Dr. Stephanie Pearson came on last week and told us about how her career transitioned from being an OB-GYN to an insurance broker. That was quite the left turn. The turning point was really her career-ending injury. Someone kicked her in the shoulder, and that caused her to have severe shoulder problems that led to her being disabled and really leaving healthcare. And then the whole process of insurance, brokerage, and workers' comp collections and all that drove her to want to change the system and to advocate for physicians so that we can get better coverage. What an inspiring story.
It's an incredible story, honestly. Sitting there and listening to it myself, it was amazing. Not only for the shock factor of realizing you can get kicked so hard during a delivery that it ends your career in medicine, which is terrible, but still.
Women are strong, you.
Yeah, no kidding. But then to hear her describe like absolute lows that she went through afterwards, some of the thoughts that were going through her head and being able to turn that into advocacy for other physicians. It's a very inspiring story to see that.
Yeah, and Stephanie does it in such an ethical way because she knows what we're going through and what we might go through in the future. I've gone to her before and, shown her some of my insurance coverage. And she actually came back to me and said, Disha, you don't need any more insurance. Like, you're good with what you have. Like, I don't want to tell you the wrong things. I trust that she does the right thing for physicians.
Right.
But because of her good practices, she has built up an amazing business as well.
Right. And it kind of just one of those things where if you can be personable and show that you're actually out for someone's best interest and not for your bottom line, like you can be extremely successful.
Yeah. So it's super inspiring. But Let's talk about the mental health coverage piece of what she brought up.
Right.
The whole episode was on the lack of mental health coverage for physicians.
To me, as an outsider to the medical profession, other than being married to a doctor, is very shocking. I can't believe how little coverage there is for such a demanding physically and mentally career.
Yeah. We have similar careers in that we were both put in extremely taxing situations. Josh used to be a captain in the Army, and he was Signal Corps, right? And you deployed to Afghanistan.
Yes.
You're super, stressful situations. You go through a rigorous amount of training. You're sleep deprived. You're put in really dangerous situations.
Right.
Right. You come out and you actually have amazing coverage for the rest of your life.
Absolutely. I mean, I'm very grateful that the VA, especially the place that I go to now, has been so good. They offer mental health coverage freely. And whenever I go to see my primary, he's like, do you want to talk to anybody? We know you went through this a while back. It's there if you need it. Here's the number if you want it. You can just go and do, and there's all these different options available to you.
Right. And not a single bill comes to us.
No,
right?
It's phenomenal.
Yeah. They have an amazing system set up. We've been so blessed to be in the VA system. Not enough people really talk about how good the VA system is in taking care of veterans' mental health.
Right. And thinking about that in comparison to the mental health coverage that Stephanie was offered, and then even you and your careers and your places of employment, it's like, it is shocking to see how little is offered.
Right. I mean, as a veteran, you get not only coverage and health and as much as you need, but you also get a check every month, a disability check, which is exactly what needs to happen, right? If you get injured on the job, the job should take care of you.
100%.
Especially if you can't do that job again for the rest of your life.
Right, absolutely. And talking about that, I might be jumping ahead a little bit, but the whole idea that she was being denied workman's comp because she wanted to keep working?
Because she soldiered through?
Are you kidding me?
Unintended?
Yeah. I mean, I don't know anybody. I'm friends with people who are linemen for National Grid, right? And very important that they stay healthy and they can do their job, but like, you're going to get hurt on the job. And you don't know in the moment necessarily if it's going to be a long-term effect or not. And but you're expected to do your job until you can't. And same thing with medical professionals. Like, you have to soldier on. There are people depending on you. Right.
I mean, so there's a culture of, completely ignoring your physical needs and soldiering on, which probably could be worked on which we are working on in medicine. And, we're focusing more on self-care and mental health now, which is awesome. But just the fact that she went on and tried to continue to work and for that reason had to have this humongous battle with the state.
Right. I think she said she went to court 3 times for that. I mean, that's mind blowing. Like, I know, because you get so worked up about your patients and how concerned you are for them. Even when you're sick at home, you're still working. Like, the amount of care that you have, and you're not alone. There are physicians out there everywhere who care that much about their patients, and to care that much and then to go above and beyond and then be penalized for that.
Right. So that's why it's so freaking important that we get the right insurances in place. Mm-hmm. We know what kind of insurance we have so that we do get that coverage should we need it, right? So I really liked that she's advocating for physicians, and giving us the real deal. She didn't mince her words at all. She told us the motives of the insurance company, which is they do need to make money. And there's a little bit of risk management there. For disability and life insurance, they're allowed to discriminate for past medical history, which I think is wrong. I think it should be like health insurance. I mean, I see a lot of anesthesiologists playing video games in the back, but I'm sure when S hits the fan, it really hits the fan, and it's on them, right?
Well, of course. I mean, you think about the surgeries and procedures that are done under anesthesia, and who's on the hook for that?
Yeah, I mean, they're on the hook. It's true. And those are some really, really dangerous and strong drugs.
Absolutely.
So it's very important to notice those field differences, I guess. I mean, it's not like you're going to change your mind about going into OB or anesthesia because you might not get as much mental health coverage, but it's good to know these things, right? The kind of insider stuff.
But this is exactly why you need advocacy for medical professionals, because anybody stood back and said, if someone's going to devote their life to helping others, but depending on what field they go into, we're going to give them less coverage. Does that work with any ethical thought whatsoever or moral thought?
It doesn't sound right.
No.
I mean, they're going to be working in the emergency room. Therefore, they're going to be at a higher risk of totally losing their mind. So we're just not going to give them that coverage. Yeah, I mean, it doesn't sound right. However, I'll tell you, it's more coverage than we've had in the past. And that's what Dr. Pearson said, too. I mean, even if you don't get 5-year mental health disability benefit, even a 2-year mental health disability benefit sounds kind of good. It's better than what you get with your employer-sponsored policy.
Granted, but that's still saying, see this bad program, it's better than the one that was worse before it.
Yes, it's true. So, we're making progress.
Yeah, no, absolutely. And that's, it's very noble what she's doing to help move that process and that progress forward.
Yeah. Speaking of past medical history, after the episode, I actually went back and read up on the DSM-5 diagnosis criteria for depression because I was like, am I doing this wrong? So now, since I read up on it again, I will share it with you. So for depression to be diagnosed, you need a same 2-week period where you have at least one of the following: depressed mood or loss of interest or pleasure. But 2 weeks. And then you have at least 5 of the following things, things like feeling empty and hopeless, whether you feel it or someone else observed it, markedly diminished interest or pleasure in all or almost all activities of the day, nearly every day, significant weight loss or weight gain or appetite change, sleeping more, sleeping less, psychomotor agitation or retardation, either observed by others or by yourself, fatigue, loss of energy, feelings of worthlessness or excessive guilt, diminished ability to think, concentrate, or indecisiveness nearly every day, recurrent thoughts of death, or recurrent thoughts of suicide, of course. So anyway, these are the general symptoms of depression, but it's important to know the diagnostic criteria because if you're going to diagnose it and record it in someone's chart, Stephanie reminded us that has severe consequences for them. down the line. And I know we're all very careful, and I'm sure we're thinking about this every day, but we do get pressure from, coding specialists upstream telling us that you need to diagnose this, this, and this. And we just need to make sure we are 100% clear that, that does impact patients. And we make sure we do it the right way.
Right. And I think if I remember correctly, she said that every time you visit a therapist, a psychiatrist, social worker, etc., a code is generated, right? And that could severely affect coverage.
Yeah.
Which, again, it feels like you're being penalized for trying to get better.
For seeking care, right. The moral of the story is the goal is not to penalize you, but this is the reality that they can discriminate for your past medical history. So that's why it's important first to get it early on in the career before you need the visits, hopefully, but we all have been angsty teenagers and there's something in everyone's past.
You kind of have to play the game.
Yeah, there's no game to play though. That's the point. Don't try to play the game. Just know it might impact you, but you got to get the coverage. Because even if you get depressed and you have a little less coverage or your rates are a little bit higher, you could still get hit by a car tomorrow and be completely disabled, right?
That's 100% true.
There's so many different things that can impact you that can disable you, that being afraid of seeking mental health care simply because you don't want to pay an extra $20 in your premiums on your disability insurance, that's not much of an ROI. That doesn't make sense.
No, it doesn't. But again, the fact that the system is set up that way doesn't make it easy for somebody in your position or in Stephanie's position to go and seek it because you know what the impact is down the line.
Yeah, in the same time, it hasn't bothered me, And it really shouldn't keep you from seeking care because the effects of not seeking care are devastating. Every day we see reports of doctors committing suicide and, and just terrible, terrible stories that are clearly tragic, and it's mental health issues that we need addressed. So we have one of the highest rates of suicide. The occupation of doctoring is one of the highest rates of suicide of all occupations.
And even before that, you got to look at burnout and everything too. And if you want to start changing the system, you got to use those statistics and go to the hospital administrators, be like, hey, how much does it cost you to recruit, retrain, and bring another doctor up to speed versus how much are you really needing to spend on coverage for mental health?
So I thought that discussion was awesome, and I hope you gained something from it. I hope you, are feeling inspired to look at your own policy, see what kind of coverage you have, and see if you need more coverage or not. But it's important just to be aware. If you have an employer-sponsored policy, make sure you're reading the fine print, getting the actual documents of the insurance policy, and reviewing them at some point. All right, so let's move on to real estate investing.
Let's go.
So tell us about your experience with our real estate portfolio.
So as of right now, we have 2 properties, both of which managed by a management companies, separate ones, and looking potentially to get a third in the near future. But the whole process, honestly, it's a process. It's long. It can be daunting. It can be expensive to get it up and going. The overall process, with a lot of the things that you can look at that could scare you away from it, at the end of the day, they've been such great investments. They've been such great tools to help us, on our financial journey.
Yeah, absolutely. They've been very critical for our wealth growing process. And especially with the recent craziness in the stock market, the real estate portfolio that we've had has continued to protect us from the ups and downs of the stock market. And the diversification there has been really key in maintaining and continuing to grow our wealth, even though the general economic environment has been somewhat testy. So let's talk about real estate investing, because you get a lot of rah-rah out there, people that really believe in real estate. And you know what? We are part of that crew, okay? But we're going to try to give you the pros and the cons, and the real cons that we have seen, but haven't deterred us anyway. Yet.
Not yet.
But, okay, so the benefits, the reason we like it. First thing is, of course, when people think about real estate investing, you think about the potential for appreciation, right? You buy something for $200,000, 5 years later, it might sell for a whole lot more.
Absolutely. More often than not, a property or land itself will appreciate in value over time.
Yeah, and these days it's been insane.
Right.
But yeah, the potential for appreciation is there. You hold on to a property, but not only that, you also, with a good investment, you're also getting cash flow, right? So real estate investors generally invest for cash flow, unless you're in a very specific market like New York City where you can count on appreciation. But really, you don't want to count on appreciation because what you need to do is focus on the property actually bringing in positive cash flow. So the income that comes in with rent is more than your expenses steadily, right? And most of the time, it's not much more than your expenses. It's like $100, $200, positive. But in the end, you need it to be positive in order to stay in business.
Absolutely. And that's the kind of the goal, is to finding a situation, finding a location and building or units or whatever that is going to allow you to be positive.
Cash flow positive.
Yeah, either by a little bit or, best case scenario, by a lot. But as long as it's positive, that's, an appreciating asset for you, then that's the goal of investing.
Yeah, and that cash flow is not tied up in your retirement accounts. The good thing about rental cash flow is that, you don't have any age limitations, you don't have any penalties. You get the cash flow no matter how old you are. So that's awesome. The other thing about real estate investing is it diversifies your portfolio. So if you have stocks and bonds and real estate, it protects you from crazy markets like it has us. And the other thing is you can use leverage. So you can buy debt to buy an asset. You can take on leverage in order to purchase a property, whereas you can't really borrow from a bank so that you can put it in your brokerage account.
Right.
I mean, not if you tell the bank that. It's probably not a great move. So that's unique about real estate, that you can actually borrow money and invest it and then make yourself money from it in a very real way. And of course, like retirement accounts, real estate investing also has tax benefits. The tax benefits really are the key for me for real estate investing, because while the cash flow is nice, at the end of the day, it's not all that much after you account for expenses.
But
it's the
deductions.
It's the deductions, right? So you get cash flow and you don't get taxed on a lot of it because the government incentivizes real estate investing. The government wants you to create housing for other people or wants you to be a real estate investor. So the way they give you a tax break are several. First, there's depreciation. So depreciation means it's basically a fancy word for a tax write-off. Depreciation really is that the government lets you take the value of your investment, just not the land, but the rest of the building, and act like it's depreciating. The things are breaking down. There's normal wear and tear. And you get to take 3.6 something % of that value of the house and write it off on your taxes. You don't have to pay tax on that amount of money coming in from that property. So this is several $1,000s depending on the size of your property. You get several $1,000s of tax break just for owning this property and the government telling you that the property is, breaking down over time. Yeah. And we'll give you money. Yeah, and we'll give you a little tax break because it's getting older. You don't get that kind of tax break on your regular primary residence, even though it's also wearing down. But you do in real estate. Not only that, you get to write all of your expenses off. I don't get to write off the plumber's bill for my primary residence, but I can for my rental property. It's a business expense. So that's awesome. If you sell the property, so there's a thing called a 1031 exchange, another really cool way to get some tax benefits of real estate investing. If you do a 1031 exchange, you can sell your property, not have to pay taxes on it, as long as you invest the proceeds from that sale into the next property within a certain period of time. Then you don't pay taxes on that sale. Also, say you hold on to a property for your whole life and you pass it on to your progeny, to your kids. Then they get a step up in the basis, and now they don't have to pay taxes, all the taxes that you deferred from depreciation, which might recapture when you sell the property. If you pass it on to your heirs, then you don't have to pay taxes on that either. Really, really,
it's kind of nice.
It's a lot of tax benefits.
Yeah.
Not only that, there's also something called bonus depreciation now. There are different depreciation cycles. So you can take all of the depreciation of the 27.5 years of the property and put it all in the first 5 years and get a whole bunch of money off in those first 5 years. If you're making a ton of money, it's just, there's so many ways to get tax breaks from real estate. But do note that you can't take the tax breaks you get from real estate from passive investment and apply it to your active income, except there's a loophole there too. If you have real estate professional status. So if you meet the IRS qualifications for being a real estate professional, which means that you spend a certain amount of time on real estate and you can prove that it's the majority of your time, then you can take those passive losses, quote unquote, from real estate and then apply it to your active income. So if you're doing real estate for 60% of your time, doctoring for 40% of your time, then you can get really a huge amount of tax benefit from real estate investing. Lots of really good ways to get tax benefits from real estate. Real estate investing is also a hedge against inflation because as prices go up, as you've seen now, during this inflationary period, costs of goods have gone up, cost of housing has really gone up. Costs of houses have gone up, but so have rents, right?
Absolutely.
And so have property values. So this is a very good example of how real estate hedges against general inflation because the costs of housing also go up with inflation. The other thing I really like about real estate investing is that it gives me control over my investment.
Oh, absolutely. It's as opposed to giving money to like the market, which is invisible forces that tell you what percentage is being made and everything else.
Yeah.
It's something you can touch, something that you can work on physically. You see it, you can, repair it. It's that tangible quality. Like I appreciate that we appreciate that because we enjoy working on it. We enjoy going there and, having that ability to improve it ourselves.
Yeah, you can put in some sweat equity, right?
Exactly.
You do little things, put some new paint on, replace the fixtures. Yeah, and you boost the value of the property. You have a lot of control when you own real estate directly to be able to control that asset. And it's something tangible you can take your kids to. Like, this is our house too, right? And
right.
We take our kids and they help us paint, between tenants and that kind of thing. And it really fosters that sense of ownership and teaches them about the value of investing.
Yes, they're going to know how to repair any size hole in the drywall.
Why do we know this? No, I'm just kidding.
Carpet too.
Carpet too. Yeah, we just got a puppy who has a penchant for eating carpet. What is with that? I don't understand. I've had a lot of puppies in my life, and this one's just special.
A good word for it.
Yeah, she's so sweet. It's a good thing she's so cute.
Yeah. I got to say another kind of benefit from my viewpoint on the properties that we have because we use a management company. It's it's passive income. Just straight passive income month to month. We get that check from management companies who take care of all like the day-to-day needs of everything. And it's great. We help on turnovers. We have input on like the big repairs and all that kind of stuff.
Sometimes.
Yeah. At the end of the day, it's a great source of passive income.
Yeah. I mean, if you buy property directly, you can make it quite passive by having a management company. Mm-hmm. Sometimes more passive than I want. Sometimes I want to be more involved in tenant selection and such. But once you hand it over to a property management, they generally want to do it all and want you to stay out of it, which being a control freak can be somewhat difficult. However, it does make it passive and it does take that off your plate, right? And for me, that is worth it to not have to, answer those calls in the middle of the night about the AC or, famously the toilet. However, we haven't had to do that yet. So
deck fires.
Yeah. Well, okay. That was during the day though. There's always, market demand. There's always market demand for housing. Sometimes it's more, sometimes it's less, but most land is a limited resource. So it's a good investment in that you can't just, make land from a computer processing farm in China. You know what I mean? Like crypto, for example.
Not yet.
Not yet. And then you do have the potential of creative financing too. So like you really want to get into real estate and you don't have the cash, then you can come up with ways that you could do a seller finance deal. You could pool a bunch of money from different people and, go in as partners to buy something. There are all many kinds of ways to buy real estate and invest in real estate. And that's what makes it fun. And then, of course, the really great thing about it is that it is a great way to build long-term wealth.
Absolutely. I mean, time goes on, real estate most likely will appreciate, rent will go up over time, and just building that wealth over time. It's great.
Yeah, and you get multiple properties you pass on to your kids and they can do stuff with. It's a really nice way to diversify your portfolio, and we love it. We still love it, even though there have been ups and downs. Let's talk about the downs.
Downs. Yeah. So I will say, like, the biggest down for me, or at least the biggest thing that always catches me, is the sticker shock for the initial investment. Yeah. Having that down payment and then, remodel, and then, we have to finish it. We have to landscape it. And it seems like a never ending list when you get to that point.
Yeah. That first year with the property, you're going through the process of buying, the headaches of negotiating and being in the market, looking for a place. It's not as fun to go house hunting when you're going real estate investment house hunting.
Absolutely.
You're not like going to buy like fancy places.
No. And then for us, especially once we do like close on a place, we like to do the updates ourselves, like to do the minor repairs ourselves that we
and
can
even
do.
the major repairs. We got to get it all done.
No, absolutely. But then it's like finding the time sometime to do that when you have to run back and forth to Home Depot because, I got the wrong patch for the wall, or I got the wrong paint match. Ugh.
Yeah.
And it's just, but when you're working full time as well, like that's a time investment that has to happen.
Yeah. I mean, the last time we bought a property, I felt like I was wheeling and dealing on the phone in the clinic all the time because there were so many contractors I had to, track down and then track down again because I felt like I was always trying to track down contractors because they wouldn't show up. Bless their hearts. But they got it done, but yeah, that first year is capital heavy. Lots of money goes into the property initially. So the first couple of years can be cash flow negative because you're putting money in and then that pays out later. Oh,
absolutely. Over time, it does settle. And then that negative, if it's there at first, will reverse and you'll get a positive. Then,
you get the property up to code and whatever else needs to be done to make it look nice. You get the tenants in, hopefully some good tenants, and then it starts cash flowing, becomes more passive. Another thing about a house, it's not really easy to sell. We talked about the difficulties of buying, but also it's not easy to sell. It's pretty illiquid.
Right.
If you wanted to get that cash out, you would have to put it on the market.
Right. Well, that's the other side of the coin when we're buying a place. It's what if we were trying to sell it that whole time period that we're frustrated, they're frustrated because they can't sell it quick enough.
Yeah, exactly. Yeah. So it's an illiquid investment. That's another downside. Another downside is, property management. If you're not hiring a property manager and doing it yourself, the most people feel like they don't want to be the ones getting the call about the clogged toilet in the middle of the night.
Right.
Especially doctors, right? We already are on call. We don't want to get any more calls. But the good thing is you can hire property management to do that for you. But then you have to manage the managers, right? Make sure that they're not ripping you off.
That's true. Sorry, side question. Middle of the night, do you prefer to get a call from the hospital or from a patient or a call from a tenant?
Patient.
Okay.
I can't send the tenant to the ER. Just kidding. Yeah, no, I mean, I am not a fan of calls in the middle of the night in general, which is why I don't take it anymore. But I am thoroughly in the higher property management side.
Absolutely.
Of things.
I don't want to get called in the middle of the night either, even though I've never had to experience it.
Another downside, you do have that cash flow variability because you don't have a guaranteed dividend every quarter or whatever. You hopefully get tenants that will pay rent monthly, but you always have to factor in vacancies. First of all, vacancies cost a lot. And also sometimes tenants don't pay. And in times like COVID where, the landlord was very restricted in what they could do for non-paying tenants, that's a huge risk, right?
Yeah. I mean, even now there's still a lot of restrictions on landlords and for squatters, more or less.
Yeah, it's very hard to evict someone, and to go through that eviction process, it can be scarring.
Right, and then you got to look at there's differences between short-term rentals, long-term rentals for that rental income cash flow variability, because you could have whole seasons where you're getting less cash flow, and you have to make sure that the seasons where it's much more higher occupancy covers that time frame for the year to make it yearly positive. And
I'm glad you brought up the different types of investments. I'm mostly talking recently from a perspective of long-term tenants. But if you get into the short-term space, now you're running a hotel.
Right.
Now you have, tenants turning over. You got to worry about seasonality. They're not going to come in the winter or whatever.
Right. And cleaning fees are another thing you have to worry about at that point too, that can affect that, cash flow.
Yeah. Absolutely. So lots of risks there too. The risk of non-payment really, when a tenant just stops paying rent and then you have to go through the process of eviction, it's just not fun. Not something anybody wants to do. I take pride in providing housing. I came from a background of poor living in subsidized housing, and to have a good house over a family's head to protect them, give them a space to live in is a huge thing and a huge privilege. And I really am very thankful to be in the position to be able to do that for other people, to provide them with a safe place to live. But, the risk of non-payment is a big deal, because you are taking on leverage. You need to be able to pay your own bills, right? So that is a big downside of real estate investing. It really comes down to tenant selection, even though you can't do much. You can't discriminate when you select tenants according to the law.
I think it's very minimal too, like the bar that they have to be above for income to rent. And it's just got to show that there's income. That doesn't mean they're going to actually pay you anything.
Yeah. So there's a bit of luck involved in getting to tenants as well. Maintenance, another downside.
Yeah. And again, that can all be factored in by the age of the structure, the age of the appliances, the tenant wear and tear, if it's in a high storm area or a coast with salt water, all that stuff can factor into maintenance costs. So it's just things that you have to keep in your mind, even if it's not like a daily thought. It does happen. I mean, we've had to replace hot water tanks. We've had to replace security systems that wore out and everything. So it's things that have to get done over time.
Right. And going from maintenance to liability, if you don't keep your property, if you're not replacing the batteries and the fire alarms, you can be subject to huge lawsuits for liability. So if you're neglectful at all, and even if you're not neglectful, sometimes people get sued just because somebody fell on their stairs, It's not, I don't know if that's actually a thing, but I haven't actually read a case report of that. But, people will sue, especially doctors, when they hear who owns the property. So liability is an issue. You can try to diminish it by putting the property in a LLC. And there are different complications with that as well. Know that if you put your property in an LLC, that if you have a mortgage, that it might be due on sale. So you really need to make sure so that when you transfer it over to the LLC, the bank can consider the property sold to your LLC and then call the loan. That's not actually a very common occurrence, but it is written into the mortgage usually. So it's important to get the bank's approval before you do that.
If they wanted to be a stickler about it, they have the legal grounds to be.
Yeah, exactly. And then there's limitations to the passivity of real estate investing, depending on how in control you want to be of that. So while it can be passive, it's not always passive. And there's a lot of active market research and all kinds of phone calls being made, While we don't deal with our rental properties on a daily basis, we probably deal with them at least on a monthly basis, even though we do have property management.
Right, but just going back to the expenses of owning additional properties. Think about if you have one property, it always seems to need something, right?
Yeah.
Well, if you have 4 or 5, 6 properties, that always something is now multiplied by 4, 5, 6. And it's a monthly basis because a tenant, they want things fixed right away. Something that you, in your own personal home, may be able to, I can live for 2 more weeks without this. It affects that income.
Right. There are a lot of downsides to real estate investing. In general, I think I'm still, looking for our next property right now. In general, it has been such a powerful wealth building tool that I'm willing to overlook the headaches. And honestly, it's a lot easier to make $1,000 a month from real estate than it is go into the hospital and work a shift.
And you're absolutely right. There are a lot of potential negatives, but they're potential negatives. And if you do your due diligence and you stay on top of it, you have a good management company, you make sure your tenants are good, they're not, burning the place down.
And you treat them well.
Exactly.
You take care of the place. And then you have a little bit of luck.
Right. A little bit of luck goes a long way. But, more often than not, if you are, again, doing your due diligence with it, it will be, a net positive for you.
Yeah. And it does involve taking on debt. Real estate generally, the numbers work better if you take on more debt. You get a higher cash on cash return. So that is something to keep in mind for those people that are super debt averse. But the good thing about real estate debt is that you are investing in an asset. So it's an actual investment rather than an expense.
Exactly.
And then, like I said, the tax benefits are really where it's at for real estate investing for high-income professionals. So I think we covered a lot. Any other last thoughts on real estate investing, Josh?
For me, especially, and I know there's a lot of people out there like that, the sticker shock, you're going to have that. You're going to see, oh man, I got to put down what for a down payment, and then I got to pay more to renovate and everything. Yeah, you do. And that's something that you have to be okay with, and something that you can afford in your situation, which may affect your ability to choose where you can do it or what you can purchase for that investment property. But like, again, due diligence is key. Work those numbers, make sure it works for you and for, your family and your situation. And then it can be a powerful wealth building tool.
Yeah, the numbers don't lie. I'm so glad you brought that up, because in a future episode, we're going to cover the ways to run the numbers on rental properties and what numbers we're actually looking at. But the numbers don't lie. If you have a negative cash flow, don't invest in that property. You have to know how to calculate the cash flow, calculate the costs, estimate the costs if you're going to go into it. It can be a little scary initially to look at this huge other space of investing that is incredibly active. But if you are interested, I encourage you to read on it. There are a lot of really good books out there talking about real estate investing, teaching you how to do it. People that are into real estate are really into it. I mean, they really want to teach you how to do it too, because there's no competition, really. Yeah, there's market competition in buying properties, but there are usually plenty of properties for investors, and there's no reason to compete with each other. Most of the investors I know, we're great friends. We share resources, we share numbers on contractors. I do not know a real estate investor that would not go out of their way to teach you about it, because they're so excited about it. And they know that you too can get rich doing it. Because that's the way to get wealthy. It's a really easy way to get wealthy in America, specifically because of the tax benefits. Mm-hmm. Well, let's wrap up the show. Josh, I'm so glad to have you on today.
Very happy to be back.
All right. Well, we're about to go out and watch a classical show. One of my favorite parts of our financial plan this year is that we decided to donate to the Saratoga Performing Arts Center that has this huge list of amazing artists that come through. And we're about to go out and have some dinner and listen to some amazing music. So we're going to get to it. Y'all have a great day. Stay frugal. Stay at it. You can do this. And we're right behind you. Have a great day.
The content shared on this podcast should not be taken as individualized financial advice. We are here to share our knowledge and experiences, but it is crucial to consult with professionals such as accountants, financial advisors, or attorneys who can provide personalized guidance based on your specific needs.